Hi, it's Adam Hewis, and I'm coming to you, as always, from the digital studios of Market Club, and we're looking at what has proven to be a very, very good market for us, and that's gold. As you can see, we caught our market a buy signal right here, had a nice move up, and the market hit our first target zone, which we outlined at 110, which is right here, and it's backed off that level. That happened yesterday. And today we had some little selling pressure. We were down below 1100. The market came back and is closing right around, I'm doing this around about 5 o'clock on Tuesday. And this is a new record high close for gold. The previous high close is right here this day, and that was around about 103. So we're closing about $2 higher for the move. Now we're seeing a little bit of a flattening here, which means we're sort of, the market's beginning to take a breather, and we could see sort of sideways action before we see another continuation to the upside. We're seeing that flatness come into the MACD line. This is the MACD indicator, or the MACD indicator, and that's sort of flattening out, but it hasn't turned negative yet. It can flatten out, and certainly we can still see the market go higher, but we'll have to watch that very carefully. All of our indicators, the monthly is positive from 929.50. We're currently trading at $1,105, so it's got a big profit in there. The weekly is from 1,024, so that's about $80 profit. And the last one was the daily from 1,047, and that's approximately $58 in the black right now. Now the question is, where are you going to put your stops? There's several ways to play this, and I'm going to show you the options that you have. If you're a long-term player, you want to give this market a wide berth. Okay, so you want to look to be down here somewhere. This would have to be, meaning you'd have to risk a lot of profit. But let's just take this off the screen for the moment, and let's look at where we would see this market pulling back to. So given the uptrend, I would say you want to be very careful. If you're a very short-term trader, you want to be probably putting your stops right around here. And we'll give you an exact point. We'll take this off the screen and we'll look at to see where that is. And that's going to be right around the 1,095.50 level. If it goes below there, you may want to take some profits off the table, but don't give up all your position, because the market should go much, much higher. And the other way to look at stops, you can do it this way too. You can get on-chart studies. It's easy to do with Market Club. And you can go something like the parabolic, which is a very nice little indicator. And you can see how that indicator has worked in the past. And it's a nice way to move your market stops up as the market comes in. Now here's where the indicator is right now. So if you can look at this sort of going up like this, that's where it turned down, and of course that's where it came down through there. So again, the stops are quite a ways away, and that's the type of market that we're in. We're not in a close, tight market. We're in a bigger market, and even though we've had, let's say, 1, 2, 3, 4, 5, 6 days in a row higher. Yesterday was a lower close. We're back up today. It looks as though we may see some consolidation around current levels. I'm going to take everything off the screen again because I want to scope this out a little further to get a better picture, or a bigger picture, I should say, not a better picture, but let's just scope this out really easily. I'm going to take all our indicators off the charts, and I'm going to go still further out. And this is what we talked about before. I'm going to take this on-chart study off. It's easy to just click there, click off, and it's gone. But this was the energy field we talked about before, and this is why this market is so dynamic and so, in my opinion, so positive. This, if you just draw a very simple line right across here, this is a huge base that's capable of propelling this market much higher, as we said, to the $1,250 to $1,300 range. And this is just on a technical basis. If we get emotional on this market, which I think potentially we will, as gold tends to be emotional, it could drive it even higher than that. But the reality is that we are in a bull market, and we have to recognize that. And it's likely that this bull market will continue for the balance of the year. So let's just be positive. You know where the stops are going to be. Protect yourself, but look to get long gold because it is going to go higher in my opinion. So this is Adam Hewison for Market Club. Thanks for stopping by. Look at some of our earlier gold videos. I've got the links below, and see what we said back then when it wasn't looking quite so positive as it is now. So thanks for stopping by, and every success in this market.